Good morning, Fractal Effects team. If you're following along with us today, make sure you're doing a demo account. This is for educational purposes only. We are not financial advisors. This is not financial advice. We're currently tracking a trade from the morning session with the blue zone indicator. So we're just going to jump right onto the charts. Make sure you do read the disclosure on fractaleffects.com in the footer section. So here we have NAS. We've had a double break to the upside. We forecast that both NAS and US 500, I should say, are going right into the end dog, previous day's high. That's what we're looking at. Those are the targets. There's a 4-hour fair value gap here as well. We've come back into the New York fair value gap, bounced off of it, created a 1M fair value gap, which we tapped. Now we have some consolidation happening, some gesticulation, but inevitably our goal is to hit this target up here. This was a 7-hour fair value gap I marked off, but just going to turn that one off. And then how we use divergences: as soon as one of these hits this zone, you can technically count on the other one hitting it as well. Coming back into this fair value gap now. We want to stay above here. Deeper retracement into this fair value gap to the 20 EMA. Nine seconds left. I want to see this reject and then start pushing up. On the 5M, we're actually consolidating. Usually a consolidation leads to a continuation. Pushing down even deeper. 28 seconds left. We've left these equal relative lows here, so I might want to sweep that one time. Tap the 50 and then continue up. But right now that's what we're forecasting is into the NWOG, which is the new week opening gap, previous day's high. And there's a 4-hour fair value gap up here. That's the target for the early session. We have 2 minutes left until the range is formed. I'm usually not a big fan when there is a 7-hour fair value gap in between. the target. But as mentioned before, just seeing this consolidation here, 1 candle, 2, 3, 4, 5, could get a power of 3. Consolidation, manipulation to the downside where it sweeps this low and then pushes back up. Ideally, we want to just see this keep pushing up now. We'd like to see another 1M fair value gap being created. Hopefully we don't get too much gesticulation. I'd like to get a bullish confirmation. We have an upside expansion model. We had a late buy model, double break to the upside. The only confluence really going against us today is Tuesday. Tuesday's footprint does take us usually to the bottom of the range. We sweep out previous day's low. But just the way the market is sitting right now, we're closer to the previous day high and the NWOG as we are to the NDOG. Today there is no real news, high impact news drivers. And usually on those days the market does revert back to fair value. Now fair value comes in the form of an equilibrium of the range, 50%, or it reverts back to the NDOG or the NWOG, the new week opening gap or the new day opening gap. So here comes the manipulation move. Most likely a bounce off of this fair value gap, or perhaps just the 50. Possibly a sweep of these lows. Let's see if we get another 1M fair value gap, or if it just closes it off here. I'd like to see this stay open, create a foothold here. No, Just closed it off. And the more it consolidates, the more we're likely to get that one last sweep of these lows. I'll show you what that looks like on the 5M. Just these lows here. I'm going to push up. But let's see. This is another one of those traits that kind of shows us that this is the dealer revealing their hand. Once you see this consolidation, you know we're going to get at least one manipulation move. Remember, accumulation, it's AMD is the acronym. Accumulation, manipulation, distribution. Accumulation, consolidation, same thing. So you have an AMD power of 3, they call it. Either way, we're either going to get a fair value gap here, or we're going to get a sweep. But the targets are the targets. Our range is fully formed. We're most likely to get a bullish confirmation next. But let's just wait and see what we get. Still just gesticulating. This is a good sign. Most likely just going to either, again, create a 1M fair value gap and push off of it, or sweep these lows, and then that'll be our manipulation and distribution. But I'm still setting targets to the upside. Okay, looks like we're getting that 1M fair value gap. That push up. Remember, we don't always have to have a manipulation. That's why we wait for that 1M fair value gap. Let's see if it's created. It hasn't fully formed yet, but The manipulation move isn't always promised. Sometimes accumulation can turn into a distribution, then accumulation, distribution, accumulation, manipulation. But we just got to wait for those telltale signs. Still no 1M fair value gap created here. Let's see if this one sticks. There's our bullish confirmation. We're almost at the target. So we have confirmed on the 5M. There's our confirmation. And we could get a deep retracement before hitting this consequence encroachment of the 4-hour fair value gap, the NWOG, and previous day's high. A lot more room left on US 500 for that move. Getting a retracement now. Pulling back into the range. Let's see if this 5M fair value gap sticks, or if we pull all the way back down to that 20 EMA and sweep out those lows. Minute 14 seconds left in this candle. Let's see if this fair value gap stays open. This could be our foothold, or it might sweep the lows. Four seconds left. So there's our fair value gap. 20 EMA down there. I want to see this get hit. Another fair value gap be created. Not too much room for growth, so we want to see on the 1M. I want to see that fair value gap be tapped, and then on the 1M, I want to see what it does. Continuing to push up. US 500 has more room for growth into the analog. This is the more interesting trade now. See if we get that pullback or if it just continues up. Since the 4-hour fair value gap is flush on top of the new week opening gap, I'm just going to get rid of it. Those are the targets. Previous day high, new week opening gap. Still no foothold here as far as the spotlight strategy. For the blue zone strategy, we've already completed it. We've already hit the targets. Let's see if we can get another entry here. Looks like we might be pulling back into this fair value gap now. Let's see. Let's mark this properly. As soon as we hit it, we drop down into the 1M time frame. Remember, hit a fair value gap, create a fair value gap. See what happens. Just patiently watching now. I want to see a 1M fair value gap be created. Like I said, there's more room here on the US 500. This is the one we'd like to eventually see go up and crush that N log right here. "33 seconds left. Let's see if we leave a 1M fair value gap here. "13 seconds. We're back at the NWOG. So the midpoint of the NWOG and the previous day high, those are your targets right here. Once we actually get a foothold, I want to see this fair value gap stay open. Hopefully we continue to drive up here. 44 seconds left. Wait 6 seconds. Let's see if this stays open. Right now, NAS is the stronger asset. NAS was the first one to break, have a double break to the upside. NAS was the first one to hit the NWOG. So we do have a fair value gap left open here. This is a good sign. Now we just want to tap that. Once you tap it, just want to close over this. Another candle closure over this. And hopefully another fair value gap created. Zoom in. Three, two, one. That would be the entry. Not much room for growth. Again, it's not the kind of trade setup I would have taken. I'm still happy with the morning session. That gave us our 1 to 3R. This one, there's not too much to eke out here. But nevertheless, one to 1.91. Yeah, not a setup that I'd be interested in. But still, just to show you guys how the strategy works. There we go, slowly heading up there. NAS close to the midpoint of the NWOG and the previous day high. US 500 created a new fair value area on the 1M. Here, after taking this high. want to see a push up from here. We're at 11 o'clock. So another 1M fair value gap created here and here. Might do one last dip down, touch that 20, push up. Or I might just continue up from here. You want to see at least take this high as quickly as possible. On NAS, I'm just going to jump back up to 5M. Let's see if it gets up to this target within our allotted time. Once we take the previous day high here in the US 500, we'll actually conclude this and make it an early session. We'll go over what the morning trade was. And again, the strategy works like clockwork. Excuse all the ranges here. You don't even need them here. I'll get rid of them. So we had a break to the upside, pull back to London's fair value gap, and then we had a double break. Because remember, we wait to see either if we have a double break or if we set up for a bearish 5M fair value gap after we sweep the highs of the manipulation range. We didn't get a fair value gap here. Immediately, we had a double break. So what do? We don't jump in immediately when we get a double break. We wait for price to retrace back into one of our zones, either our blue zone or the NYC fair value gap was created actually in between that. That's a powerful area that the market actually bounces off of. So it might not, we knew that it might not make it all the way back down into our blue zone. That's exactly what happened. We bounced off of it, created a 1M fair value gap that we took all the way to the bottom of the NWOG. That was the morning trade. And then today's, the spotlight setup was just as clean. Just going to bring some of those areas back here. So the spotlight setup, bullish confirmation, only fair value gap created, tapped, 1M fair value gap created, tapped. There was just no room though in the spotlight strategy. Like there wasn't much room for growth. It was a 1 to 1.91. That's why I wasn't interested. I was more happier with the morning trade. Today is Tuesday, so the only confluence that went against us, obviously Tuesday sets the low of the range. The low of the weekly range, I should say. But instead, we're about to take Monday's high. So that means Monday will most likely be the low, unless there's also a 70% chance Wednesday could set the low, depending on whether or not we have a doji candle set up on a daily time frame. But it's as simple as that. Literally, all you got to do is assess what you're looking at. This couldn't have been more faster and more cleaner. Once again, I'll get rid of all of this just so you guys can see. We had a upside expansion model. There's Asia, there's London. We had a buy model. So it's technically, this is what we call a stagnant buy model, meaning it didn't break until open. London didn't break either side. But at the same time, London's high was above Asia's high. So it's a stagnant model buy. And then eventually we did break. There was your double break. Then we knew we were looking for a buy only. Remember, a double break is the dealer revealing their hand. We had a bit of divergence here on US 500 where we didn't get the double break until later, until the retracement happened, which was another great sign that let me know that if one's going to retrace, the other's going to retrace back into one of our key zones, and it did, right back into here. Could have taken another trade setup from here, went right into it. So that's 2 clean setups today. The blue zone strategy performed perfectly. You hope for days like this where it's this clean. And then the spotlight strategy couldn't have been quicker, but at the same time, not much room for growth with the spotlight strategy. My target is only previous day high and the NWOG, the new day opening, the new week opening gap. Those were our targets. NAS has already hit them. And US 500 will most likely cross over that previous day high. That's what we've set up here. But again, it was only a 1 to 1.91. We don't take anything that's under a 1 to 3 risk to reward ratio. So I personally wouldn't have been interested. I was, again, happy with the morning trade. That gave us our 1 to 3. That was our entry. And that was our exit right here at the bottom of the new week opening gap. Remember, you set your low-hanging fruit as your target. Did I have a feeling it was going to cross the midpoint of the NWOG and take out previous day high? Yes. But here, this is the safe point. This is where you know it's going to hit and then pull back. So this is a quick in and out. You don't get greedy. Focus on the low-hanging fruit target that can easily get you in and out. We'll still wait and watch to see US 500 cross previous day high. Just going to bring back some of these lines. I like to leave these little fair value gaps on until I take a screenshot and journal. Make sure you're journaling at the end of each trading session. That's the only way you can tell if you're profitable or not. Have an Excel sheet ready to show you profit and loss, your risk to reward, and then actual note section where you're making the notes of why you took that trade or why you shouldn't have taken that trade if you have a loss. Always go over each trade with a fine comb and see what you did wrong. Again, nothing is perfect. There is no strategy that's perfect. That's 100%. But at the same time, there's always things you could have done better. If you have a loss, there are people that don't set a stop loss. You could have maybe set a better stop loss. You could have done better market analysis where you might have waited a little longer to see which direction the market was going. There's always things that you can do. So I always leave these little fair value gaps. It looks a little messy, but until I take my notes, until I make my journal entry, I don't remove these. Just like this here. It's important to know what fair value gap you took, what the risk to reward was, what your target was, etc. Now the next iteration of the blue zone indicator is going to have the DSDs painted. Those are our daily standard deviations. And today we were above both of them. So our daily standard deviation high was actually under us, right here. And our daily standard deviation low was all the way down there, right by previous day's low. So that would have been our target if the market suddenly shifted down. And we could see that the momentum was to the downside. We had a sell model. We bounced off of our blue zone. Then my target would have been previous day low. That's the low-hanging fruit because that's before the DSD. And then inevitably the DSD low would have been the final target. So once again, NAS is already completed and hit its target, US 500. That's the low-hanging fruit, previous day low. Even though there's the midpoint of the NWOG, aim for the low-hanging fruit. I just want to see if we did aim for the midpoint of the NWOG. Would we have 2.68? You could leave a runner, but I would definitely take partials here once we cross over previous day high. And I would move the stop loss to break even. That's once we cross, of course. And then you can leave a runner all the way to the midpoint of the NWOG. That'll get you, what was it, 2.98? 2.85. Got about 15 minutes left in our stream. And that's how it plays out. Sometimes you have a fast day where everything goes according to plan. Sometimes it gets muddy and messy. But the beautiful thing and how these two indicators, both of these are real-time indicators. None of that time-lagging bullshit that people follow. We utilize some of that stuff, like EMAs. Sure, they're important to kind of give us a gauge of where everything is in the market. But that's not what we use. The blue zone literally paints out zones in real time based off of a myriad of data points. There is a ridiculous amount of computation happening on the back end of this indicator. And here's the funny thing is, once we complete this next iteration, the one that we're working on after that, our 5.0, is going to make things even more ridiculous. Like we couldn't do anything other than, or rather it's nothing short of holding your hand all the way to the end, making sure you get home safe. even as it is right now, we're satisfied with what it's able to do. Again, about 15 minutes left. I want to see it cross previous day high. That's where you should take your partial, move your stop loss, let it run to the midpoint of the NWOG. NAS, once it's, has it taken it? Yeah. So even though NAS has taken previous day high, it's kind of stuck there now, just waiting for US 500 to catch up. And who knows what's going to happen after that. Remember, it's only a buy model until it's not. It's only a sell model until it's not. Meaning once the targets, the objective that we've been aiming for has been accomplished, then it could reverse. Could push down in the opposite direction. Now in US 500, we've left no 1M fair value gaps here, but this one. This is the first one. And again, it's right there at our 1M fair value area, which was never tapped. I'll include this one too. So we have yet to actually come down and tap this zone. About 12 minutes left in our stream. But as soon as we cross that, we will conclude. Overall, markets are up. US 500, pulling back down to the 20 EMA. So if in the next 10 minutes we haven't hit this target, I suggest you just move your targets to break even anyways. That way at least you're in a safe trade. You can take some off the table. That's if you're in this in the first place. Again, if you're following along with us, make sure it isn't a demo account. You should be able to execute this on your own. This is all for educational purposes. We're not always going to be here for you. There's 3 different sessions. You could be trading the London session on your own. You could be trading the Asia session on your own. Tap the 20. Now let's see if we push up from here, or if it wants to do that deep retracement back down into that fair value gap. Usually don't want to see that deep of a retracement this late in the game, because we are at the NWOG. The fact that NAS is just gesticulating right there on previous day high. Looks like US 500 is making that push now. Again, as soon as we cross that, we'll conclude. So, anybody in this trade, what would you do next if this was an actual trade? Once you cross that line, you move your stop loss to break even, take partials, and then let the rest run to new week opening gap. Let's be exact about this. I know with all the boxes that are painted with both of these strategies, it becomes a little hard to see at times, but you can turn all these off. You can click it, turn off the NWOG. Let's see if we can't get up there in this candle. And we'll make that the last candle here. Come on, 26 seconds. So we have left this 1M fair value gap right here. We could tap it and continue up from here. And complete the move. Obviously too late to get in for anybody watching or joining late. We're just following this to the end now. Previous day high, that's our target. As soon as we cross it, move your stop loss to break even, leave a runner all the way to the NWOG. There's another thing too that people get confused on. Whatever broker you're using, know their spread for every single asset that you're trading. Because you want to make sure that you're subtracting the spread and or adding the spread, depending on your stop loss and your take profit. I've had people reach out to me and tell me, hey, I set the same take profit, but it punched me out early. It's because you didn't factor in the spread of your broker. You're supposed to factor that in. You can find that information if you're using MetaTrader to trade, MetaTrader 4 or 5. You can see the spread of individual brokers. So make sure you know that information. You make sure you're calculating it in properly. If you don't know how to calculate it properly, I've said this before, you can find trading calculators online, pip calculators. It'll ask you the spread, it'll ask you the pip, it'll ask you the asset, etc. And then it can tell you what your stop loss should be or what your take profit should be. But know this information. So right now we're just gesticulating. We're under that 1M fair value gap now. We've already set our targets. This is going to continue to do a couple of sweeps, I'm sure, here, hit the 50. We already know exactly where we're going, and we know exactly how to react. So we'll conclude our session there. Please check us out on fractaleffects.com, where we teach high probability trading. Our package deal right now is ridiculous. You need to go check it out. You even get a discount on your TradingView, all for as low as $50 a month. TradingView, you get access to Market Sentinel, which is a third-party signal service that we've partnered with. Use them or don't use them. Again, it's not something we promote. It's something that is that you have access to if you choose to use it. They are a company that is primarily using, they reached out to us, they use our strategies exclusively. So that's pretty much what they're going to be utilizing. You get access to Market Watch, which is updated daily. That's since we're not allowed to give financial advice, we went out there, we're interviewing market analysts, all the professionals. We're getting quotes. We're getting their projections of what they say as far as what they're predicting where the markets are going to be going. You get that free in your package. You have access to, obviously, the Spotlight, the 20 years of aggregate. That shows you exactly what the market was doing over the last 20 years, broken down into charts and graphs. You get access to our indicator suite, the Blue Zone indicator and the Spotlight indicator, which we're constantly evolving. You get access to our master classes on the back end, exclusive content. I believe that's most of it. But again, check us out, fractaleffects.com, and we will be live tomorrow. Have a good rest of the day.